TCS, the stock trades with minor gains ahead of numbers today. The key thing to watch out for will be dollar revenue growth, which is seen at 1.3% year-on-year.
Ambuja Cements, that stock is higher in trade after Nomura. Well, they have a buy rating on the stock. They've placed their target price of 780 rupees per share. The key reasons that they give is that capacity addition will outpace the industry. Volume growth will also outpace the industry. And they said that they're perfectly poised to cut their cost going ahead as well.
Shalby Hospitals is up around 5%, now 4%, after it signed a 30-year lease for the Asha Parekh Hospital in Santa Cruz, Mumbai. And also the company sees EPS accretion from some of its acquisitions in this year itself.
IRCTC enables QR code-based ticketing for the Delhi Metro. Tickets now be booked up to around 120 days in advance on IRCTC's website and mobile applications. Hello and welcome to Chartbusters. I'm Nigel D'Souza. Joining me as always is Mangla Malu. Well, as we speak, the Nifty is down a little bit. The mid-cap index still in the green, and the Nifty Bank, that's under some pressure in today's trading session. Hey, Mangla.
Hi, Nigel. Good morning. We were looking at the markets opening right into that resistance band, and that's exactly what has happened. The question is whether we see support or not. Once again, it's a Thursday. It's the Nifty weekly options expiry. So let's see where we go. We are in the middle of that 24,150 to 24,400 sort of range for the frontline index itself. But let's focus on a lot of individual companies. Savory snack maker, Bikaji in focus. Remember recently there was a Nuvama note as well, which initiated coverage on the company and spoke about the strong growth potential. Bikaji itself has given a 13 to 15% sort of volume target for this year, with about 0.5% EBITDA margin expansion as well. In the middle of the second quarter now, how is demand? How is the business panned out so far? To give us a bit of a lowdown and an outlook, we have Manoj Verma, who's the COO at the company, joining in. Thanks a lot, Manoj, for joining in. Always a pleasure speaking with you. And that really is the first question. What exactly is the demand situation that you saw in the first quarter? Do you maintain your volume target of 13.5%, revenue target of almost 18% for this year?
First of all, thank you very much and good morning to you all. Now, coming on to the growth, I talk about, so there certainly was some mild slowdown last year, which industry witnessed. But the good thing is that there's an uptick in the quarter one this year, and this is both across rural and urban. With forecast of normal monsoons, this trend is likely to sustain. That's how we look at it. The numbers, what we have done is, from our budgeting perspective, we would go with what we have spoken about. And I'm sure time will tell, and teams would really work hard if we surpass these numbers.
All right. So early mid-teens growth, early to mid-teens growth is what we should work with in terms of volume growth?
Yeah. So this would certainly be higher than the category growth. That's the internal numbers, how we look at it, basically. So if the category grows even faster, we'll have to further jack it up.
All right. The fear is hopefully the category doesn't grow slower, but it seems people are snacking enough. But while they snack, they'll also be looking at pricing. And we have seen that some input costs have moved up a little bit. Is that, how do you see that panning out? Have you managed to push through some price increases? If yes, could you quantify it?
So if you look at it, last year there was quite a relief which we got. So prices had come down big time, after continued 6 quarters price increase and increase. So what we did was that we passed on these price benefits to the consumer in the form of, say, consumer offers, 10% off, so on and so. And that resulted in, if you look back last year, our volume growth were higher than the value growth. This is one of many years kind of a case which it happened. Now this year in quarter one, what we've done is that we've pulled back or rolled back few of our consumer offers, and which is the kind of a price increase as well. We're managing the pricing very well in terms of the way our purchase teams have done their job. So we don't see price increase as much a challenge. And if time comes, we are ready in terms of passing it to the consumer. But for now, there's not much of a change.
All right. And what about the margins then? Because X of PLI, you had a target of about 0.5% improvement in margins. That would take your margins from last year to this year at around 14%. Is that very well on the cards?
That's what we said, yes.
Okay. What about utilization? I mean, last known number was close to around 40 to 45% of the overall capacity that you had installed. What's your utilization ramp-up target for the next couple of years? And by when do you reach the peak revenue potential of close to 4,500 crores?
So last year, if you look at the kind of volume growth we have delivered, and now we are at about 44-45% capacity utilization. The target for ourselves is about 13 to 15% volume increase year on year, and this would stand for next 2 to 3 years kind of a stuff, which eventually should take these numbers, to about 65-70% utilization. As we hit 80% will be the time wherein we'll start looking for further expansion kind of things.
There was some outstanding amount that you received from the government with regard to PLI, right? Have you received it?
No, so we have already received for 2 years. For third year, we have filed it this year in April. I think in a couple of months' time, we should get that money.
And the quantum was what, 40-45 crores?
That's correct.
All right. What about the overseas market? Currently, it's a very small part of your pie, but say in the next 3 to 5 years, where does this mix go to? I mean, in terms of exports.
So yes, exports market is not a very big pie of our business. It contributes to about 3.5%. Going forward, also the percentage contribution would not move very high because the kind of growth what we are looking for domestic markets as well is more or less in line. But yes, we look forward in next 3 to 4 years, we should be doubling this the exports business for us.
The acquisition that you made of Bhujial Algae about a year ago, you were looking at revenues of almost 100 crores coming in from their business by FY26. Is that still on the cards? What did FY24 end at for Bhujial Algae? And what is the target for FY25?
So we were looking at 100 crore revenue by 27. That's what we said 5 years time, right? It's well on track. In fact, now if you look at last year also, they've done well. And in Q1 also, it's the numbers are in line with what the budget we had for this brand. This was a strategic acquisition which Bikaji made to have a brand B strategy and is working well for us.
All right. And, generally when we speak to you, we also speak through you for the industry. You spoke about the industry growing at a certain rate and you trying to grow faster than that at around 13 to 15% itself. So I just wanted to know how big are your other unlisted peers? Because, when everyone speaks about the ethnic snacks space, there is a lot of chatter around Haldiram's, etc. So from your understanding, how big do you think their business could be and the margins that those guys would be, reporting as against you all?
See, this category is very huge and that's why, it is catching eyes now. That's one. Yes, there are very few listed players and large unlisted players as well. When we talk about the way category is growing is basically the need some Nielsen data, some industry experts. That's what kind of data we refer to. Talking about the bottom line margins, I think, the companies who are primarily into the Western snacks or high contribution of Western snacks would be a single-digit EBITDA margin. That's what we believe. And the companies who are very well organized would be, say, around 16 plus kind of EBITDA margins. I mean, that's the room wherein these EBITDA margins would be played.
And what would their revenues be according to you?
Yeah, sorry?
What would their revenues be according to you, Haldiram's?
Sorry, I'll not be able to comment. I would not have because Haldiram is also in some merger. It's Haldiram Nagpur, Haldiram Delhi entities. Then, they have their QSR business and also it's not reported as well.
Would they be twice your size at least?
But yes, they're I think, multiple times of what we are. Much, much bigger.
All right. Final question before we let you go. What's the market share in both your core as well as your focus markets as per your estimate or guesstimate?
So overall, if traditional snacks we talk about, we are about 8.59% market share at a pan-India level. wherein, if we speak about in our core states, it's about 45% market share. And in our focus states, it's much low. It's less than or close to 2%.
All right. Just one final question then, because you said that there are multiple of your revenue. Just roughly, is it 4 times? Is it 3.5 times? Just trying to understand, largely because you last year did revenues of close to 2,200 crores and your market cap is roughly $2 billion. The reports that are going around suggest Haldiram's valuation to be around $8 billion. So are they 4 times your revenue to command that sort of valuation?
So they would be around 4 times. That's true. I think this is where our guess is.
All right, take that point. Thank you so much for joining in and giving us an outlook into your business, holding on to your growth numbers as well. And through you, we get to understand or get a snack of what the Indian ethnic snacks market looks like as well. Always a pleasure speaking with you.
Thank you very much.
With that, we'll shift focus to a special segment where we get you ideas for profit coming in from our colleagues at Money Control Pro. And today we have Nitin Agarwal joining in to talk to us about a stock that he's been tracking closely.
The company that I have chosen for today is ZF Commercial Vehicle, which is an auto ancillary company and a leading supplier to major auto OEMs in India and in international market. There are a couple of factors that make us a bit about the company. First, industry outlook is encouraging. The fortunes of ZF CVs are directly linked to the growth in this commercial vehicle segment, and with the coming back of the government in the center, with the focus more on the construction, mining and infrastructure activity, the demand outlook for commercial vehicle looks very, very positive. Apart from that, in the international market, the company is expecting the muted demand for the commercial vehicle. However, they are expected to outperform the industry growth primarily on the back of the wide product portfolio. In addition to that, the management has indicated that the company is expected to outgrow the industry growth by around more than 10%, primarily on the back of increasing content per vehicle driven by the wider or newer adoption of the newer technologies. Apart from that, the company has been focusing on the sunrise EV sector, which is expected to augur well because this is also expected to increase the content per vehicle. In addition to that, the company has a leadership stature in the auto ancillary space, and it is one of the few auto ancillary company which have bargaining power with the companies across India and in the international market. In terms of valuation, the company is currently trading at around 46.4 times FY26 projected earnings, which is at a discount to its 10% discount to its long-term average, and hence we advise investors to accumulate this stock.
All right, thanks a lot for that. On the other side, we'll get chatting with the management of Kesoram Industries. P. Radhakrishnan, the whole-time director, joins in to discuss their first quarter earnings. Stay tuned for that.
Welcome back. Well, the markets are still sitting with the cut of around 60-65 points odd, but a lot of stocks are moving around, and one such stock is Kesoram Industries. Well, that stock is a little bit under pressure. The past quarter's numbers are a little bit subdued. To discuss the quarter gone by, how the industry trends are shaping up, and what about an update on the impending merger with UltraTech Cement? Well, we're joined by Mr. Radhakrishnan, the whole-time director and CEO of Kesoram Industries, who joins us on the show. Hi, Mr. Radhakrishnan. Always good to see you, and thanks a lot for joining in. Well, most of your business is going to be going to UltraTech Cement, but let's understand a couple of aspects. Point number one, by when does this entire, merger with UltraTech take place of your cement asset? I think earlier you were referring to by the middle of this fiscal. Going by the approvals, is that on track?
I would say before December, as things stand today.
Okay, by December, things will come about. Got it. And, the other aspect I wanted to ask you before we get full throttle on the cement businesses, earlier you were saying that the pending business, which is the rayon business, it could be looking at some infusion. And you were optimistic that by the end of this calendar year, you could come up with the money. I think you were scouting for around 150-200 crores odd. Have you got the right feelers that you can come up with this money? I asked you this because even in the past quarter, it went into an EBIT negative number.
Right. So first, there are two steps to it. One is the existing debt in rayon which is about 220 crores, needs to be eliminated. And then fresh infusion of about 45 to 50 crores minimum has to be done, which we are working on. What is critical for this subsidiary to turn positive is scaling up of a transparent paper, which is biodegradable. In India, the transparent paper biodegradable product is yet to catch up as it has caught up in Europe, America, and other parts of Southeast Asia. We are confident it is only a matter of time before it catches up. Meanwhile, our product has to have certain features for us to expand our market globally, catering to this market. Therefore, we are, as you know, it is a public domain too, we are in tie-up with Futomura, the global major in transparent paper.
Okay. You know, the
we look at
prospects...
strengthening the relationship and scaling up on the transparent paper. That's where we will move forward.
Okay. So the prospects of the business are very good, Mr. Radhakishan. But first, if you raise the money, right, that 220 crores you want to get done away with, and then you want to put in another 40 crores. So then you're looking at a fund infusion of around 250 crores. So let's not run ahead of ourselves, because the prospects of the business are good, but the initial step is to get the capital. Have you got the right feelers? Will you come up with this 250 crores by December 2024?
We are confident of doing that.
All right. And then the business turns around and starts generating an annual EBITDA number of close to around 60 crores.
Correct.
What about the finance cost? Because you said that you are looking to refinance this debt of 220 crores, right? So obviously, with the larger chunk of the debt going away on your books, what is your existing finance cost, and what would be the refinanced or the renegotiated finance cost on this 220 crore debt?
So currently it is 11.5%. And ideally, our endeavor will be to make it debt-free. Only equity infusion should happen.
Okay, so you are looking at full equity raising and not refinancing.
And only working capital debt of 30-40 crores should be there. It should not have debt beyond that.
So if I look at, 60 crore EBITDA, plus you have around 20-25 crores of finance cost savings coming in, some other income being added, etc. as well. Fair to say that this business would be, making profits ex of tax of close to 80 crores?
This is fair, but the key to that is scaling up on the transparent paper. Therefore, infusion, that will have a gestation period of anywhere between 18 months. So this full potential will get realized 18 months from the time this becomes debt-free. Then, and Futomura agreement is taken to the next level.
All right. So 18 months from now, maybe it's an FY27 story. If that is the case, then X of your Civil business, which you said will go out in December itself, what would be the top line of the company, and the bottom line? You've given us a sense that could be around 75-80 crores.
So currently it is 300 crores. When it is 75-80 crores EBITDA generation or bottom line generation, the turnover should be in the vicinity of 550 to 600 crores.
Okay. Let's talk then. So we have got an outlook about the company. Let's talk about the business now. And now we get some trends for the cement industry. What was the volume last quarter? If you could give us a sense about that. And also, how did prices change? Between Q1 in comparison to Q4, you have exposure to South as well as West India. And if you could tell us as well, how are prices today in comparison to the first quarter?
So in comparison to the first quarter, prices today are flat.
Okay.
And between fourth quarter and first quarter, prices were off by 200 rupees per metric ton. That's where we were. The prices were flat, and the demand was not as usual as a first quarter would be. Of course, the attribution is due to election in the states we operate in. Across the India, it happened, of course. So we did a volume of including some sale of clinker, close to 1.6869 volume we did, million tons. as against 1.9 million ton. But however, we are maintaining we will do 8 million ton for the whole year.
By that time, it will be already in Ultratech's book. So, and the last year itself was quite difficult. Every quarter, you're revising it downwards. So, that's about the cement space. What about the EBITDA per ton? According to your calculations, what was it? I think in quarter 4, it was around 400 rupees.
It is close to, we include other income too, right? 487 is what our EBITDA per ton for the first quarter. Let's say close to 500.
And it compares with what in quarter 4? How much lower was it? Quarter 1 versus quarter 4?
Quarter 1 versus quarter 4, it was because the costs were better. 40 rupees we were better, in fact, EBITDA per ton.
Okay, so
quarter 4 reduction was much better in quarter 1 compared to quarter 4.
So 450 has turned into closer to 500.
Yeah.
All right, take that point. Thank you so much for joining in. You had just one more question, Mr. Radhakrishnan. Since we have you with us, a lot of buzz of consolidation. Now, normally we used to put that question to you and then used to say, no, I don't think that anything is happening. But that ultimately did take place. Have you heard of any other assets folding up? I mean that there could be a few of them. Have you heard the same?
I've not. I too read from the papers, lot of buzz going around. Nothing more.
I'm sure you read from the papers and you read beyond that as well, because, there is so much happening in the southern part of the country. Earlier itself, we saw the investment come into India Cements. And now, what's happening here? What more?
See, cement is cyclical. Any industry where commodity consolidation happens, probably that's what is happening.
So more is likely to happen?
No, consolidation happens any industry, across industry, be it cement, steel, telecom. So,
you must be feeling good, Mr. Radhakrishnan. You must be feeling good. At least now you're not so much in the hot seat. The pressure is eased a little bit. Normally the fire was on you, but anyway, your asset is going to go out. I believe there's going to be some more consolidation. So let's see how that takes place in the next 6 to around 12 months. But we look forward to chatting up with you at the end of this quarter and getting an update from you as well.
All right. Thank you so much for joining in. With that, we'll give you a quick programming note before we slip into a short break. We have a big budget exclusive for you. Today at 3:30 p.m, the CNBC-TV18 CII Budget Town Hall. It's the entire top brass of the industry body will be in attendance. We will quiz them on their budget expectations. We'll have Sanjeev Puri, Sanjeev Bajaj, Sunil Kant Munjal, R. Mukundan, Chandrajit Banerjee, B. Tyagarajan, Shenu Agarwal, people like Vinod Agarwal and many, many more who will be speaking exclusively at the town hall for 25 years. CNBC-TV18 has been covering the budget, the union budget. So keep it with your budget destination for all the big budget newsmakers, exclusive news breaks and a lot more. 3:30 p.m. today, the big budget town hall.
Welcome back. Well, the markets are in the red, as you can see. The mid-cap index, though, that's the flag bearer. That's the only one that's still trading mildly in the green. But otherwise, the markets are actually at the low point of the day. Yesterday as well, at the similar time when we were winding up on the show, the markets were a little bit lower, but we saw a good recovery by the time we wound up. So let's see whether or not the markets can bounce off even in today's trading session. For the time being, we wrap up on this edition of Chartbusters. You stay with us because trading hour comes up next.